I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Welcome back to the show, Bob.
Good morning, Jim. Good to be with you.
The Canadian dollar enjoyed a nice run of about a week and a half, but as all good things, it came to an end.
Yeah, we should be clear that firming up of the Canadian dollar was not due to any improvement in the abilities of the government. So it was mainly the commodity dollar aspect of it, because you had a nice recovery in crude oil prices, and then that helped firm up base metals and things like that. So, yeah, I got above 78. And today's interesting because at the open in New York, the U.S. dollar index jumped up a bit. And then, bang, everything reversed. You had gold, silver down. You had crude oil down. You had other commodities weaken a little. So, and then plus the stock index is down a bit. You know, no big moves here. But it was interesting that the players can't stand the concept of a firmer U.S. dollar, and this is actually becomes very important in the post-bubble world, and by that I mean the main big bubble completed in 2007, and it had many of the features of previous great financial bubbles, such as 1929, or the one before that was 1873. And so then you had the worst crash since the 1930s. Of course, it was the biggest bubble since 1929. Well, that makes sense, doesn't it? So then now what we've been on since 2009 is the first bull market out of a classic crash, and the first business expansion out of a classic crash. And using the senior economy, the U.S., it's been a weak recovery. And this, of course, is driving policymakers mad because they get these arbitrary ideas that the economy should be doing better. And so then they've been force-feeding it. But there's not that much demand for credit in the real economy. So the extra credit will always find a place to go, and it went into speculation in low-grade bonds, junk bonds, high yield, all that sort of stuff. And, of course, it went into the stock market, and it went into high-end property markets around the world. And in Vancouver, of course, the speculation in real estate is right down to the low end. But, the Hong Kong market for their residential index peaked in August a year ago and is down, but it's been flat for the last 2 or 3 months. Then in last fall, somewhere in there, the market for high-end stuff in London, England changed and suddenly discovered that there was more on offer than there were bids. And much the same in Manhattan. So the illustration is that the Fed may ease desperately, but it's always the public that chooses what's going to be speculated in. And the Feds are still tied to this now quaint idea that if the Federal Reserve expands credit, it'll immediately go and expand business, which is not the case. So they've turned loose a monster, and it's the old illustration that, you got a tiger by the tail. If you let go, it's going to claw you. You know that your arm's getting tired. You got to let go. So there is a certain inevitability out there now. The Federal Reserve have never, ever thought that they would suddenly get religion and become responsible. No way. A contraction will change the game, though. I think the general public will look at the next contraction when it's well underway and say, look, you guys are just plain dead wrong. You've usurped all of our tax money in a gamble that you can expand credit and get economic activity. It isn't working. So where on the political side, in U.S. is a good example now, the general public is trying to get rid of the elites and the experts and get control of their government processes. And then the other half of that is that since forever, at least far too long, you've had a nationalized currency in every country. The U.S. has the U.S. dollar. We have the Canadian dollar. That has not been convertible into anything else, any other money proxies such as gold. So then the public has had no choice. Whereas if you have a convertible currency, the public can then choose to settle in currency units or in the gold equivalent, and this keeps everything honest. So with the election in the U.S., the public is attempting to gain control of government again out of the hands of the elites. And, of course, part of that will be the public attempting to gain control of money and take it out of the hands of the elites. It's a privilege to be alive and vertical and watching this as it progresses.
OPEC says it might freeze production. Is that going to affect oil prices, or is there so much sloshing around it doesn't matter what OPEC does?
I think you're right on that. Too much sloshing around. You got oversold at the first of the month, and you've had a nice smart rally, sort of up and testing the 50 level. There's also kind of a positive seasonality here into September, but it's precarious. I see no reason why crude oil, and let's remember the seasonality, the other half of the seasonality is that you can often have very important lows for crude oil in December and January, as of last year, and the low was $26. I think it can go back to there quite readily, and this is going to confound a lot of people, particularly people at OPEC who still perhaps have the delusion that they can manage oil prices. There's this the urge to sort of manage something and try and get a favorable outlook through policy has always been there, but and there are times when it's seen not to work, and I think this is what's coming. So, gosh, I remember, with the Olympics on now, when OPEC had a lot more influence back in the 80s, and what was his name, Sheikh Yamani, who was the head OPEC guy, and he was considered to be all-powerful and everything else, but then one of the columnists at the time wrote that everybody was focusing on Sheikh Yamani's words, much as at an Olympics where you would focus on a cross-eyed javelin thrower. So at any rate, I think the prices of most commodities will likely decline, maybe beginning in September. With this, the U.S. dollar would be firming up, and with this, you'd have quite a widespread decline in commodities. And this then feeds into the general economy. It reflects a weak pricing power, and I saw an article about that just a couple of weeks ago in sort of general retail, that there was very little pricing power. And so this then gets to be a problem with businesses who if they haven't got the pricing power, they're not making much money, and in the boom they will have taken on lots of debt, and then you have to service that debt, but if you're not making much in the way of earnings, it's difficult. And then the credit rating agencies are kind of looking over the shoulder of every company and saying, you're not doing so good, we're going to lower you a couple of notches on your credit rating. So this is what may begin somewhere to be noticed in the fall. So, but in the meantime, we should look at the groups like the precious metals have been absolutely outstanding. The stocks, particularly, the metals themselves, and it looks like, in every rally for precious metals, silver will outperform gold. And it looks like on momentum, the best was in a few weeks for silver relative to gold. And so we've also got some other technical stuff that are registered, let's call them alerts, sort of excesses in speculation. So I think that the precious metal sector, which has been so fabulous, can take on a significant correction. And this could roll over somewhere in the next 3 or 4 months. 3 or 4 weeks. There's a certain seasonality out there where if you've had a lot of dangerous things, radical things going on in the credit markets, which is what we have had, that those offside and can no longer meet their obligations, that unpleasant discovery is usually made in the fall of the year. It's amazing, the seasonality there. So we would get cautious on most investment sectors, including long bonds. The long-dated treasuries a month or so ago generated a very excited peak, technical excesses, and the bond price has been downticking. On the credit spread side, the difference between high-grade and low-grade bonds, the narrowing of credit spreads since the disaster ended in January has been fabulous. It's still going, and again, this one is somewhat tied to crude oil and can change somewhere beginning in a few weeks from now. So credit spreads, if anybody is in high-yielding stuff, it's time to take some profits on that and stand aside on it. And as I said a couple months ago, we had the big excess in long-dated treasuries or long-dated governments in Canada. So a number of the very popular trades are too popular, and one it's best to stand aside with part of your money.
We'll have more with Bob Hoye right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Bob Hoye. Bob, the British government has said there will be no formal Brexit application before the end of the year. Does that stabilize anything, or does it just make the future in Europe even more uncertain?
No, I think that's just unwinding steps, I guess. The decision by the British electorate to get out of Europe is very wise. It was surrendering its political sovereignty to a bunch of bureaucrats in Brussels who were unelected and unaccountable. It was a potentially huge nightmare. Certainly enough of a bureaucratic nightmare now. It could turn into an even worse one. So statements like that, no, they're just sort of comfort statements, and how they unwind it is going to be difficult, but the current Prime Minister says that it's going to happen, which is they've again, this is another one of these things where the public is beginning to take over the control of government, and so here in Britain's case, it's really rather dramatic because they had surrendered government to bureaucrats in Brussels. So it's going to be difficult to take it back, but I believe they will do it. Politically, they've been much worse conditions ages ago. There was one time in 1688, well, actually, this is the classic example. There was dissatisfaction amongst the public, a developing popular uprising, an authoritarian king who wished to keep his authority and was talking about bringing in troops from France. Ooh. And then businessmen in London and smallholders all around the rest of England said, this isn't good. But at that time, they had to have a king in a constitutional monarchy, or what became a constitutional monarchy. So they got William of Orange from Holland and brought him over, and it was called the Glorious Revolution, and it was a tremendous revolution without bloodshed, and it was the kind of thing where the authoritarian side with the king and his political party just looked at the numbers or the movement and said, we really can't do anything about it, and that was it. So they got rid of the last absolutist king there in England, and this is quite similar. You've got an authoritarian government that makes promises and boasts, that lives exceptionally well, huge expense accounts and all that sort of stuff. And it has promises about how wonderful their abilities are. And the general taxpayer then, at a moment, says, oh, this isn't really what you're saying, and we're going to change things. And the last time you had a popular uprising that really changed things was in the late 1980s in Eastern Europe, where the uprising took a look at in Russia, the nomenclature, or whatever they were called, and said, you're out of here. And they took on a murderous police state and shut it down. So here, like in the United States now, it's certainly not a murderous police state. All it has is propaganda. So it should work out whereby the public begins to get control of the apparatus of government. So I'm looking forward to it. It's wonderful.
Right, Bob, you're going to be the first to storm the ramparts, are you?
Oh, given a chance, yes. How about you?
Well, I'll do the Canadian thing and write a letter to the editor.
Okay.
If there's a paper left to write an editor to.
Yes.
Bob, thank you so much for chatting with us.
Yep, Jim, good to be with you, and we'll look forward to next week.
My guest has been market historian Bob Hoye, and when we say historian, nobody else mentions 1688 in their business reports, Bob. Bob is the Chief Investment Strategist for institutionaladvisors.com. You're listening to HowStreet.com radio. You can find us on Twitter at Talk Digital Net, or check out our popular YouTube channel, Talk Digital Network. You can forward questions to info@HowStreet.com, and Bob does answer those questions. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.